following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exceptional version of the Power Trading Hour with me, your humble, lovable, squeezably soft host at the headquarters of technical trading and investing. It is TFNN.com. And like that Chinese curse, may you live in interesting times. May you ask for volatility in the market, would probably be the allegory to that one. And we've got a little bit of volatility and a little bit of mocking the gods. Yes, I saw people mocking the trading gods today on Financial Infotainment. I just kind of fast forward through all of them. But I saw somebody looking rather bloviating, rather pontificating. And I slowed it down for a minute and listened and went on. But I knew the answer already, which was there was no fear. Buy. And that was when the S&P was down about 4 points after it had been down, 11 or 12 points. And it's, of course, back down to the lower levels of the day. We were off almost 13 points to a billion shares as we start the show. We'll get into commentary in just a second. Let's do histoire, because, of course, if you don't know your history, you're bound to repeat it. In this day in 1861, the first paper money payable on demand, whose color gives our bills the name greenbacks, is issued by the U.S. government. Slightly before we decided to tear our union asunder with a giant civil war, which, I don't know, you always wonder whether it could happen again. Certainly we are having a fairly vigorous discussion about the future of this country, and we'll see how that goes. Now, to get to the actual markets, the thing that's, of course, interesting to me, we'll get into these charts later. There's nothing I'm going to show here for the next few minutes. But what I'm, if you haven't listened to the news, of course, we've had a airliner, and for all practical purposes, I'm 99.9% sure it was shot down. We've had somebody take responsibility for it. And the question is, after putting on rather vigorous sanctions and going it alone, what would Putin's next act be? I don't have any doubt whatsoever. He used some of his agents and plausible deniability. He was going to start shooting down aircrafts, and unclear whether he got this one wrong. But if there was a very vigorous discussion also about between some generals and some senators at one time, and a rather folksiel general. He was basically, I think he was in the Air Force. He was certainly had to do with, this is, I think, around 1980, 1981, something like that. Cold War still in full swing. They were, I think the senator was asking what the plan, if the Russians had any plans. And he said, Senator, the Russians don't go to the bathroom without a plan. None of the people underneath them do anything without a plan, and every one of them follows orders, or they're marched out to the middle of a field and shot. And my guess is that whatever these guys did was certainly under orders. Could it have been a mistake? It could be, except we already now know that that same plane was flying over at the same time for the last 30 days. So probably if it was a mistake, it was a true boneheaded mistake. The other people are saying, well, these guys are not familiar with weapon systems. Well, probably half the quote-quote renegades over there in the Ukraine are officers from the Russian army that have taken their uniforms off, taken Ukrainian names and act like Ukrainians, and are indeed just Russians. And I don't know if a lot of people know it, but how many of the pilots we shot down in the Vietnam War were Russians? They were not, for a handful of them were truly North Vietnamese pilots. But when they started getting shot down real quick, they replaced them with Russian pilots very quickly. They had no parachutes or working ejector seats in those. If they got shot down, their job was to die. And they recovered more than a few of those planes. And, of course, the U.S. kept it very quiet. But of the planes shot down by, I think, our last living ace, Duke Cunningham, I think of the ones that he shot down, 5 of them, they're pretty sure that 3 or 4 of them had Russian pilots. So it's not something that is new, and it's all about plausible deniability. Now, what does this mean for our markets? That's why when I started seeing everybody at noon poo-pooing that this would be anything more than a blip on the radar and a buy, and the VIX will be back to its low before the end of the day, I was highly suspect. And maybe it's because I spent a lot of my misguided youth reading those wonderful novels like Hunt for Red October or some of the other ones. In which the author did a huge amount of research about how things actually did work. Before he wrote those novels, he wrote a game that I used to play called Harpoon. And it was a kind of a war simulation. Before now they have all the first-person shooter games. But one of the first things I did with one of the first computers I built at home was build kind of a simulator for his Harpoon game. But I've probably spent way too much time. Maybe it's going to pay off today on Russia. But certainly the way the KGB works, the inner workings of how politics in Russia works. But certainly Putin is trying to take them back to the KGB days. And I don't buy it for a second, not for a minute. And the only thing I got rid of is I had some stocks. I had one that I had puts on that was in the gold realm, and it was time to get out of that toot sweet. So I did sell my puts on it, and they probably lost 75 cents on the puts. Much better than probably hanging on to them, at least what I think. Although it's no higher than where it was before. I think maybe in a couple of days, if this does tend to blow over, I'll be right back on that one again. But we do see a lot of volatility. But for those people that have not been through at least a few cycles, it seems like whatever breaks the market isn't what everybody's looking for. It's always out of left field somewhere, and why I'm looking at that today as one of the issues. Of course, VIX is up 15% today, and my guess is that we're going to see a great deal more volatility in the coming weeks. Before we even got into that, the market was down, and of course, it looked to me like market makers had been coming in from about 9 o'clock, trying to hold this market up. Of course, expiration day tomorrow. They couldn't hate this any more than they do. The other thing that the market makers did not like was a sign of weakness in the market. That sign was the Alibaba IPO being delayed. Now, the idea is, or the story, let me put it this way. I'm going to treat everything like a conspiracy today. The cover story for Alibaba is that they could not get the paperwork taken care of that the Securities and Exchange Commission wanted. Well, I'll guarantee you that if they had $130 million, they would have hired every law firm in New York and got the thing done. When they delay an IPO like that, and they say maybe it's some questions the SEC are asking, it's one, either a huge question that means that the IPO is never going to come out, and I don't suspect that is true, or that they've done a survey and they say, hey, this market's going to be weak for the next 60 days. Let's push that off to the fall. Now, they've been pushing this thing off almost for a year now. And the numbers have not been getting better, but getting worse for the growth in their markets. I've talked about it before on this show. There's about 40 major markets in China that have internet connections and people with cash, and not just people living in barracks building our iPhones for us. Those folks have pretty much internet access already. The question is whether or not they're going to start moving a lot of these other cities into that kind of top 40. We've got our top 50 markets here in the United States over, 200 years. Their top 40 have come along in the last 10 years. They all have a fairly decent speed internet, of course, watched over by the Chi-Coms. But to me, I'm not buying it. I thought that a lot of the weakness that came in this morning was a de facto vote that the Alibaba IPO was not coming out, that they didn't need to hold the market up to get out, and that they're going to be more than willing to let a little steam off this market until at least September now, which is the first date that they're giving that they may come back with this IPO. So between that, between the other stuff, to me, I suspect that we're going to have a little bit of support in this market through tomorrow. And then Monday, probably we may actually start seeing the kind of volume come in that says we're ready for maybe at least a 5% off the top pullback in this market. The question is going to be how many people buy every single tick down on the way down and continue to buy it on the way down. We'll have to see. But anyway, we'll be trying to keep up with the marketplace. Red October, baby, you bet. And it is, when an IPO doesn't come out, in fact, we had several IPOs, almost 15 scheduled for this week. That tend to, I think, 12 on Monday. And I saw probably a third of those are not going out again this week. And my guess is maybe we're going to see a few more that got delayed from today in tomorrow, hoping that they'd be able to push this market up and get a few more of those out. I'm looking for those after the bell to also come through and say, hey, we had this rather dubious biotech stock. We're going to raise $30 million. Probably not going to raise anything. Everybody's kind of backed off those, but we'll have to see after the bell tonight. Of course, also after the bell tonight, we've got Google coming in. Let me, if I can find my mouse pointer. There's nothing like having 3 or 4 screens and just looking to see where you would have a mouse pointer somewhere. Let's see if we can find it here. Anyway, we're looking at Google out here, and of course, after a split like it has had, pretty tough to go back and figure out exactly what's happening in this thing. Of course, you have more shares and lesser shares, but I don't know. Weakness volumes starting to pick up here at 2 o'clock. We'll have to see how this comes out. But after the bell tonight, Google, and we'll talk about that when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, as we are testing the low of days out here, low of day, we are off almost 14 points. 2.1 billion shares on the consolidated New York Stock Exchange tape. When we look at other, we already started to see weakness in several sectors. Of course, Janet Yellen started the ball rolling by dropping the Baby Ruth in the punch bowl with saying that maybe some of those social stocks and particularly these biotechs are a little bubbly. I started to get it going, and of course, there's a great quote. I'll look it up at the bottom of the hour. But basically, it's about how truth goes through 3 stages. I'll get it and put it up. But first part is it's vigorously denied. Then people are ridiculed for having that opinion. And then eventually everybody just says, yeah, that's what it was. And you go, well, you didn't say that's the way it was. You basically told me I was a moron for thinking that way. No, I didn't. Yeah, you did. No, I didn't. And I'm not changing my reality for you. And that's generally the way it works. But anyway, I was talking previously about watching people out there that never think that a market can pull back. And that's exactly when it does. When basically everybody's given up. We already know that the big hedge funds have pulled back to the lowest levels since 2007 for short interest in a market. And if you want to see the downside of a market, just make sure there's no shorts there to buy it on the way back down. Anyway, we're going to look at some stocks that are moving out here. Wanted to get to SanDisk first. SNDK? Because it's probably one of the hardest hit out here, and this is not uncommon. I've been seeing this in a lot of sectors in the semiconductor space, and I'm going to have to sneeze here, so hang on. Oh, boy. Yeah. Anyway, a commercial interruption for a sneeze. Anyway, I've seen this going on, and that is, if you looked at SanDisk and especially their thumb drives, hey, I've got one right here. 128 megabytes on one card, and I think I bought it for $45. The problem is that what SanDisk did come out and say is that their margins were hugely falling off, especially on this new DDR memory that they have, or the new NAND memory they have for USB 3.0 memory sticks. We also saw, and I reported, that some of these SSD hard drives had been trying to get reviews with the good memory and then using their lower cost, less expensive memory a month or two after the product had shipped, trying to keep margins up. And a pretty good indication that eventually you're going to break. Unfortunately, none of these companies lately are giving really good signals because we are in a bubble. You have to kind of basically know up front. And I don't think anybody really knew that the margins had been hit that hard with SanDisk. But what we did see is basically these things coming off very hard. Also talked about Intel, and I thought that Intel would come back and fill this gap a little bit. I think we're going to see a little bit of that today. Microsoft also off its highs after it tried to once again run a little higher. A lot of people kind of freaked out about Microsoft last night when they announced that they were going to probably get rid of about 18,000 jobs. About 13,000 of those are dead weight with a Nokia. Really should help them with the bottom line. It's going to cost them about $1.5 billion. But that's going to take over a year to get done, and so maybe $250 million per quarter, something like that, which is not going to be a blip on the radar for Microsoft, really. It's not something you'd like, but a billion here, billion there, you're really talking about big money. $250 million, market didn't care. As long as they got rid of that horrible thing that Ballmer bought. And, of course, they wish they had the $8 billion they spent on Skype back, too. Skype, a wonderful product, but, of course, never going to make that $8 billion back anytime soon. But they were happy because it doesn't look like that this guy is his own man now and is getting support probably from Bill Gates in getting rid of all the dead wood that Ballmer brought along. Anyway, when we come back, we're going to start looking at a lot of other stocks that have been moving out here. My guess is that going into a long weekend, it's going to be tough to start getting people to step in tomorrow. Other than market makers, they're going to try to keep this market as high as possible. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, I got to get something off my chest, but I wanted to show, how do I reload this pen tab? Move to a new window. There we go. Wanted to go and show just how much these Russian stocks have been moving on the news, if you hadn't been watching them. But we've got the Russia Capped Index, which is ERUS, if you're not familiar with it, down almost 6%. The RSX, which is the Russian Vectors ETF, down 6%. QIWI, which I think is kind of like their Yahoo, if I'm not mistaken, it's off 11, almost 12%. MBT off 3%. Yanix, which is another one that's kind of like a Yahoo, eBay, Google. 30, it's printing just under $30, but that's off 6% and change. And VIP. So if you're looking for names that move out here, I was went to look at these already, and they were already down on the news from last night, so there was no moving into them when the news broke. But this is pretty much what I looked at going into for a day trade right off the bat. But if you're looking for these names, there they are, and you can always go to Tiger TV channel 14 and take a look at them. But we'll keep an eye and see how these things close today. But certainly a volatile group of stocks anytime there's news over there about the Ukraine. And, of course, we had big spikes in wheat and corn. And we're really going to miss Andy Heck today after my show. He could give us a lot of illumination, but we'll be talking about natural gas before the end of the day. And, I had to get something off my chest today, and that was, I've seen this guy. I go out and walk 30, 45 minutes in the morning when I get up, take the dogs out. And there's this kid that if I walk far enough, I can get over to kind of a main 4-lane thoroughfare. And I kind of turn one street over and walk behind it and start heading back. But if I time it right, I guess I'm not really timing it, just by accident, I'll see this guy going to school each day. And once out of every couple of days, I'll see him, and he's been on a unicycle. Well, now he's on one of those big clown unicycles. And I'm wondering, isn't the unicycle kind of the gateway drug to becoming a clown? Who else is going to ride a unicycle these days? I can see people that maybe have a lot of balance. But, what's after a clown? You start going to work in one of those ice cream trucks that hang around kids. I don't know. I think you're better off just staying very far away from unicycles and clowns. But I saw him on the bigger, huge clown-sized unicycle today, and I thought, there's only one way this guy is going, and he's got a monkey on his back, and it's called Clown College. Probably headed to Sarasota, but I'm not much for clowns. Clown school. There is one clown school down in Sarasota, but thank God most of the people. What can you say? I wanted to look at some. A few of these stocks that are moving. But we looked at SanDisk. I wanted to look at Yum. Didn't really like their earnings very much, even though the Chinese part of the earnings have come back. This thing is headed right back down to $74 over the next couple of days. Monster volume. And that volume is probably enough to blow through the March 27th lows back here at $72.23. Now, probably we'll do a little back and fill because no one can stand a stock that's down in this market. They've got to buy it. So it's probably going to be hard to be short this thing. But I look for any short on this thing because it really looks to me like this thing wants to head back down and fill that gap around 68. Actually, the gap runs from just a little over 66 to a little over $70. That gap happened on the 4th of February with 14.5 million shares. So probably going to be fairly good support back there. But some of the things in it were good. Of course, they own so many companies now that it's really hard to pick one. But doing better in China, not so good. And I tried one of those horrible Taco Bell waffle taco things. Ugh. I probably should have shorted it right then. They were horrible. Now I'm back on the Atkins thing for about 3 weeks now. And, of course, the last thing I would do is waste any carbs on something like that. I'm looking for the day that the first day after 45 days, I'm going to have a big waffle and watch my blood sugar spike. Anyway, Yum Brands down fairly strong today, so we're looking at that. Let's see what else we have going on out here. Yum did beat by a penny, by the way, and reaffirmed guidance, but they did not like the numbers, especially from the U.S. side of the market. Mattel missed EPSs by 15 cents. This stock has just been hammered over time. Let me go back and look a little bit bigger. I mean, it was $47 at Christmas, $47.94. And, of course, right after then, they started talking the market down fairly quickly. And a fairly big move for a company like this. But certainly enough of volume already that when you look at these lows, with 10 million shares back on February 19th, 9.2 million shares for those lows. But, you got enough volume today that it wouldn't take much probably to blow through that 34.98 low from February 19th. And, probably going to bounce off of it a few times. My guess is it's at least going to break it and maybe give you an opportunity for the run for this Christmas. But there's nobody involved in retail where these things are not looking very, very weak. RSP, the Permian Basin, one of the upsides to the market today, up about 5%. Reported Q2 production increased 2014 outlook and provided operational updates. And everybody yelled and screamed. And, of course, this thing really, I watched it, went up another buck, I think, after the plane news out here. And, of course, everybody wanting to get on the bus for actual crude production and off the bus for anybody involved in anything else like refining. But it did come up. It's got some, I'm going to say, okay volume out here, but certainly no bad move. And it's going to be hard to be thinking that any of these oil providers from the Permian Basin up there are going down anytime soon. Production just seems to get better and better. Maybe the price of crude comes down hard enough, it would be better. DRC, which is going after, or basically Siemens is going to be buying Dresser Rand Group. If you're familiar with this, you'll see generators and all kinds of stuff laying around construction sites. These pretty much what these guys do. And nice, probably just about everything that's going to be in this is out in the news now, but DRC up, probably going to be a couple of months before this thing gets closed. But Siemens is considering a bid for them, and I think it was confirmed according to overseas article in Manager Magazine. BURL is another one that has some decent news out here today. And by the way, you can give me a call at 877-927-6648, or you can post a message in the den, or you can email me at path@tfnn.com. Okay, Burl announced a launch of a debt refinancing transaction, raised comp store sales for Q2. And given a lot of what it had out there, did go right up to it. But I don't know, maybe they're expecting another very cold winter like we had last year. But you had all the volume in the world. It could not hold the highs. It looks like you got a big seller anytime you get into that $33 level or even close to it, from the January 3rd high to the March 21st high to the June 23rd high. You get massive reversals on this thing anywhere it gets there. Pretty good sign that you got someone that's more than willing to sell this thing at $33 or anywhere close to that price point. What else? Can we look at HOG, please? HOG. Yeah, headed back down to the April 15th lows. Energy has picked up. Just from being around motorcycles a great deal, I do see a lot of people that are probably getting away from, I've got to have a Harley. I saw a lot more people buying BMWs out on the road lately. I'm, of course, a Ducati and Yamaha R6 fan. I don't think that there's a better motorcycle for aggressively driving on the road than the Yamaha R6. I raced it for a number of years, and it's still one of the few bikes that you can take a few parts off and throw it right on the track. Kind of like buying an M4 from BMW, other than pulling the seats out and putting in some 5-way buckles in a BMW M4. You can pretty much go right on the track and be fairly competitive. BMW, of course, has got some new really hot leader bikes. But I'm a Ducati fan. I had a 998, and I loved it a lot. Harley Davidson, of course, this is a company that has not really been doing that well with its bikes itself. It's more of a marketing and lifestyle brand, i.e. selling leathers, selling things and accessories for its bikes. Ducati has tried to follow that model and not done as well, at least over here in the States. Does much better over in Europe. But energy has picked up to the downside and suggests that we will see $63.74 tested, which is the April 15th low out here. I don't know what else you're looking at for this. There are people that are buying them. I'm not saying that. It's just I think the heyday of the late, probably started about 1998, of the doctors and lawyers buying these things and buying new ones has pretty much hit its peak. And especially over the last 4 or 5 months, I know a couple of the salesmen in some of the local places. Business is not bad. It's just I think it's hit its high watermark. And I think a great deal of these people, when you look at other people in the same business, like AutoNation, I've been talking about it for a while, that these things were set up for a big fall. AutoNation, of course, came out today, and this thing missed on EPSs by 4 cents. Of course, if you listen to the manufacturers, they're not having any problem. I think keeping margins for companies like AutoNation is the canary in the coal mine, telling you that they're having problems out here. Again, the only reason we're back up here is the hair of the dog. We've had a great deal of basically subprime financing coming back in to the market, mostly pushed by the current administration. The idea is, of course, if we get all these people with jobs, then more people will buy stuff. And unfortunately, that rarely works out. But I think just the hint of seeing anything less than perfection in some of these companies right now is going to be a huge downer. But let's see what they had. Missed on EPS by 4 cents, reported revenues that were in line but couldn't keep it. So that is pretty good sign that they were going to have margin issues. And you're going to see, of course, companies like AutoNation, now that they're public, give you a much better read on what's going to happen on the companies below those. So we're going to take a quick look at Ford out here. Not too bad. Now let's take a quick look at General Motors. And, they got bigger problems out here, but they certainly have not had volume into this March 6th high at $38.05. Went above it, closed below it, did it with a significantly lighter volume. And if we close with a doji out here today, I would suggest that this is back in a trading range, back down to the May 20th low at $32.96. CFX missed on EPS by 18 cents, missed on revenues too. Colfax Corporation. Let's actually go into the profile here so I can just read to you what they actually do. Diversified industrial manufacturing engineering company, fabrication technology products and services to commercial and governments worldwide. Company operates in gas and fluid handling. Okay. Which takes me back to natural gas and UNG. Anyway, this thing down, a lot of volume. Found some buyers, one of the few ones that's actually come back strongly back here today. Let's take a quick look at S&P. I need to back this up just a little so I can see. We're off 13 points on the S&P cash, 2.2 billion shares. The volume has been light probably the last 20 minutes or so. Probably going to be the last 30 minutes where we're going to get a much better idea on this. Anyway, Colfax coming back down. A lot of volume today, even though it did some pullback. To me, this thing has that gap around 60 to 62, and looks to me like it's probably going to work its way, albeit slowly, back into that segment. Anyway, we're going to come back and look at a few other stocks that have moved today, and we'll certainly entertain your emails at path@tfnn.com or a phone call at 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
As we come back, going to look at Sherwin-Williams. With all the news for housing, which was not good this morning, Sherwin-Williams had some fairly decent earnings out here. They missed by 3 cents reported inline revenues, guided EPS, though, above consensus, raised their fiscal year 14 EPS guidance, and the street liked it. And, of course, it's not like to like about paint, but this is a fairly weak-looking chart. And I would say that I would watch for a closed black below 208.63. This may be nothing more than them running the shorts. And if you look at the housing data, I think also some issues with that. So anyway, let's see what else. Oh, wanted to go back and just check the last few minutes here. Go back and see what we have. Still off 14 points on the S&P cash. Now, a lot of times when markets crack, it does come directly out of the blue. It's something that you don't think is going to happen. Of course, World War I started with the assassination of Cardinal, Duke Ferdinand. I'm showing, I probably need to reread my World War I histoire. But it's a lot of tough. Now, one of the things I think why this market is going to continue down is the way Apple has been responding. They got some really good news with IBM. They've got everybody talking it up. But Apple is one of these stocks that certainly looks like it wouldn't take much to get underneath their moving average. And for the next few days, we are solidly at least under the 9-day moving average. And as far as going to the displaced moving average, pretty much a solid close below it also. I think that there's probably more than enough news out here from Samsung and to show that the superphone part of this market is fairly saturated. It seems like there hasn't been a week gone by in the last 3 weeks where Samsung hasn't come out and said that it's not just us, but everybody, and that means including Apple, are seeing a very high saturation level. Now, people will be buying the iPhone 6, so I'm not saying that it's a total disaster. They're not going to sell one of them. I am going to say, though, that even with the latest version of the Samsung phone, which is really great, I've got one. Where's it at? Here it is. The whole phablet thing has been pretty much saturated, especially for women. And I think the wild expectations that they've been feeding into this market may have been an opportunity to get out of this stock if you were in it. My guess is that now that we've had a fairly decent-sized close underneath it, if we get any continuation, this is probably in a trading range back to about $80. And I think they're going to do okay. But I think there's a great deal of just about everybody who is ever going to buy Apple is in it. And we talked about this when it was at $700 several years ago. The suppliers on this are not looking all that great either. And I've been looking at some of them, and I'm starting to see the same thing we saw when it went. What did it go to 703 or whatever it was pre-split? And I think we're starting to see shades of that too, where they're not going out of business anytime soon. But certainly looks to me like there could be more than enough weakness in the stock to bring the rest of the tech markets back in. Anyway, we'll see you tomorrow. Same bat channel, same bat time. We'll be in the TFNN World Headquarters studios for tomorrow. So make sure you email your questions early in the morning, because I will not have email. So when you can, not when you have to. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.